People ask me all the time, how much money do I need to flip a house? And I hear two types of answers out there. Some people say that you need all this money, you need a bunch of cash, like hundreds of thousands of dollars or millions of dollars. Other people are out here saying that you can do it with no money down. But here's the truth. Both those people are lying to you, or both those people are not telling you the whole truth. I like saying it like that better, because you're asking the wrong question entirely. The question isn't how much money do I need? The real question is, do I actually know a good deal when I see one? Because that's what separates the people who make money flipping houses from people who don't, people who lose. It's not whether they had enough cash. It's not whether they found a good house or not. It's whether they knew if a good deal was staring them in the face or if that deal was going to wreck them. And most people don't know, and that's exactly why they get smoked. My name is Ron Woods. I've been flipping houses for 11 years and over 500 properties. And this is the mistake that everyone makes. And new people do this all the time. They say, let me just save up enough money, then I'll be ready. And that's not a smart way to think about it. I've watched people with all cash, no loan, no nothing, buy terrible deals and lose six figures. Just because they had the money doesn't mean they knew what they were doing. And I watch people with way less money make massive profits because they understood the numbers like a pro. So let's talk about where the money actually goes real quick, because most beginners only think about buying the house and they only get the cost for that. And that's just the beginning. Here's 4 places money gets spent in a flip. Most beginners only think about one, and that's why they lose. Number 1 is buying costs. We're talking about down payment, closing costs, loan fees, right? And then repair costs, labor, materials, and that surprise you get in every house. You need to save for that. The third are holding costs. What are holding costs? It's the one that catches people slipping the most. Mortgage payment. Every single month while you own it. Insurance and utilities and property taxes are included in that. Every month that house sits, money is out of your pocket and the clock is always ticking. The last one is selling costs. When you sell the house, you still got to pay stuff. You got to pay agent commissions, closing costs, cleanup fees, miscellaneous fees, all this kind of stuff. Your profit just disappeared if you forgot all of that and you ran your numbers without every single one of the things accounted for. So what's the actual number that you need? So let's get specific. Most hard money lenders, they're the people who loan money to flippers, will loan you around 90% of the purchase price. Interest rates on those, usually between 10 and 14% for new people. They're high because they're short-term, high risk to the lender investment loans. It's not like a regular mortgage. So let's use a real example. You find a house, right? You find a house for $200K. Lender's going to cover 90%. So that's going to be $180,000. You need to bring $20,000 plus closing costs plus reserves. And here's the things most people don't know. Many lenders will also finance the rehab. So you're not necessarily coming out of pocket for the whole renovation either. That's what makes flipping actually doable for any regular person. But here's the catch. Because those rates are high, if your deal isn't good, those costs will eat you alive fast. A bad deal on a hard money loan isn't just a loss. It can be painful, stressful, and lose your mind. So what happens if you don't have a bunch of money or you don't have much money at all? This is where it gets interesting. Let's say you found a really good deal, but you don't have much cash yourself. That's where partnerships come in. There are experienced investors sitting on money who are actively looking for strong, really good deals. They got the money, but finding a great deal and a great opportunity is the problem. There's a lot of money out there, but not a lot of good deals. So if you find a good deal and it's got good numbers and enough profit margin for both of you to eat, they might fund the whole thing, right? They'll fund the whole thing and you can make a big profit too, right? Here's an example. You find and manage the deal. They bring the money. You split the profit. Why would they do that? Because like I said, good deals are really hard to find. And experienced investors know this. If you bring deals consistently and they're quality and you bring that kind of stuff to the table, you are valuable with or without your own cash. And here's the real danger. is not starting with too little money. The real danger is buying a bad deal. Bad deals will drain your cash, destroy your timeline, stress you out daily, and force you into bad decisions, leaving you with nothing or worse, negative. This is why the investors who last obsess over the math before they get excited about a property. All right, so beginners ask how much money I need. So I told you, the better question is, how do I learn to spot a great deal? Because once you understand the numbers for real, funding gets easier, finding partners get easier, making decisions get easier. And the people who understand deals will win. The people who don't, they're just gambling. And let me tell you, take it from me, here's something I learned the hard way. And I learned it early on. So a deal can look super exciting on the surface and be an absolute disaster once you get into it. Repairs can go way over budget. Timelines can stretch. Holding costs pile up month after month. And the worst thing, investors who want to do a deal, they want it so badly, they can talk themselves into a bad deal. That's dangerous. But let me tell you the secret. This business rewards discipline, not excitement. And here's the bottom line. If you can't properly analyze a deal, you're not ready to flip a house yet. And that's not any shade on anything, but this business rewards people who understand risk. It punishes people who guess. The move to make right now. And before you worry about funding, you need to learn to evaluate deals. And the first step is being able to run the actual numbers on any property. Is this a good deal or is it a lemon? Am I going to make money or am I about to lose my shirt? That's why I'm going to give you my exact deal calculator I use in my business every single day. You can run real numbers, analyze deals the right way, and start thinking like an investor, not a gambler. There's a quick tutorial included, so it'll show you how to use it. Because in this business, numbers don't lie. God bless, and let's go build something.